Monday, September 18th, 10:31 a.m. New York time. Good morning. This recap of my day trade I took. Took a day trade on the Forex pair, the euro US dollar. I took a directional trade bearish. I went short. That means bearish, looking for the price to decline. Went short at 0.937. My working order closed at 9.55 for profit. Made 4 ticks on the Forex pair. Forex trades on different exchanges. So I trade the Forex currencies in the U.S. futures market from the CME, Chicago Mercantile Exchange. They have much more credibility, reliability, my opinion, for years doing this, instead of outright looking for trading currencies in the Forex exchanges. Yep, so there's different exchanges. And I know which pairs I'm looking for. And again, the ones I want do trade on the Chicago futures. That being said, because today, Monday, and this week, the U.S. has central bank policy being decided, I was considering not to trade today or much of this week. There's different financial products, not just stocks. There's commodities, there's yields, there's currencies. So I selected the currencies this morning. I had some software concerns because not my broker trading platform for charting, but the broker for exchanging the order had some updates. So I did a demo test first, which is good to do every day if you day trade every day, to make sure things are working, peak performance, instead of doing a real trade, live trade, make a mistake because some software, and that you are ultimate responsibility at the end of the day, not the company, the human being, individual, you, it's your money. Yep. So thank goodness I did a test. It worked out fine, but it reduced the number of trades I took this morning. So I took one trade for a profit. I'm a happy camper. Done. So looking here, typically when I'm scalping, aka day trading, I'm trading and looking at two major products, the S&P 500 futures and the euro. Again, S&P 500 futures is the index and the euro is the currency. So here, going left to right across the top is the S&P 500 futures /ES, and the bottom is the euro. These are continuous contracts you see here. I'm not putting in the actual contract I'm trading because for charting purposes, I use the continuous one. But again, futures, just like options, have expirations, and you need to make sure you have queued in the contract you want to trade. Once those contracts expire, they're no longer valid, that data. So again, I keep the continuous contract in my charting. And they have different expirations. Some might expire once a week, once a month. Again, depends if you're doing futures or options. Give you an example, crude oil, future contracts expire every month, where the index, such as the S&P 500, that's quarterly. So again, it's different, and it's your due diligence to know here. So now looking here on the top left, S&P 500 15-minute, 30-minute, 1 hour daily. On the bottom, the euro, 460, 15-minute, 30-minute, 1 hour daily. I don't need to see much more than that on the higher time frames because I'm day trading it. So on the far right, I'm looking at the daily just to identify if we broke out above or below the prior trading day. We're going to look here. The S&P 500 futures broke below the prior day. It was red earlier, broke below. So that's giving more bearish bias because it broke below. Where the euro inside candle still hasn't taken out the higher low yet. Today's candle. Yeah, means indecision. But again, back to back here. And then on the hourly, you see here, these columns here, you see the overnight high here, the S&P 500 futures still below that. Where you have the euro, there's a high overnight, here's a low overnight. So again, leaving more bearish bias. And these red horizontal lines are my big round numbers and quarters, really important to me. So again, you see here the 30-minute. And again, now on the far left, you see the 15-minute faster price action. Let me take this down. So again, notice this is 4 grids for each one. I don't need to see much more than that, maybe less. I'm going to delete this. So then I'm taking it to another template I have. The difference here is I drop the 30-minute, take it off, and I replace the 5-minute on the far left and move the 15-minute to the right. Look. Excuse me. So 5-minute top left and the 15-minute here, still the 1 hour here, and still the daily here. Same on the bottom. The reason why I do that, because to me, I'm looking scalping. Scalping's very fast. I want to see the faster time frame. Let's say this is my radar. I have it labeled here as radar on the top right. It's my radar. Let me see a bigger picture. Again, the 15-minute and the 1 hour on the higher time frames, that's good enough. I don't need to have a 15, 30, 1 hour. Nope. I want the fast time frames. And looking at this, again, I already have my opinion formed, bullish or bias, looking at the daily and then the intraday as well too, how things are rejecting. So look, zooming in here, a 5-minute, I like to see a reversal occur. You can see these lines I have labeled. They're labeled clearly. The time frame in them says 1 hour. So again, 1 hour, 4 hour, it's based on what higher candle that was drawn off of. So obviously this 1 hour, one here drawn would have been off that prior high. So again, it tested up here. See, it tested that high. You see here the green candle went above it. It was just prior to being tested. Yep. So now let me take you into seeing the trade. Go down to the 1 minute, but I'm going to first put it on the 5-minute. So here we're looking at the 5-minute chart. Pre-market 630 up here on the left. That was also happened to be the 4 hour high. And the big round number 107. This was the, excuse me, the overnight low. So originally, earlier, zoom out a little bit, this happened to be the overnight low. This purple area is the London session from 0,200 to 0,500. So that happened to be the low. And the overnight high happened to be during the London session. That's interesting. The London session had the overnight high and low. But since then, zoom in, coming into the New York session, we broke below it, tested below it. See this gray circle? Look at that. The 5-minute candle rejected it. What a fake out. So some people might have took that as an entry to go short and continue riding down. Well, it rejected on the 5 minutes. Let's reduce this a little bit here. Again, I'm showing charting. So yeah, it did break below the 107, big round number. On the 5-minute, but you can also see it was building consolidation, and then it had a fast sell-off here, rejection, stop hunts, that big wick on the bottom here. Let's remove this. Big wick on the bottom there. So again, panic selling reversed. It's good to wait for these 5-minute candles to confirm. So it was a fake out. It was a stop hunt, but it was a bullish stop hunt. Reversal. You see right here on that green candle, and then the trend went up in the 5 minutes. So during my software test, I'll show you on the 1 minute. The software test, I like this trigger, this setup here. So I took a short, went down, broke below here, and the order got closed there. Yep, in that fast sell-off. So again, my software worked good, but again, if that was a real trade, I would have made a profit. But again, it's more important testing the software, make sure it's working up to par. And thank goodness it worked. I didn't have to call a living, breathing person to get help. After that, I said, let me continue staying here. I think I want to do some trading. So I switched it over to live, did my trades. Well, this is what I did. 0,937. I took a short here, went lower. I had some gains, but I stayed in it. I actually moved my profit target down lower because I was more bearish. And I was thinking to reload and we have a retest up here. Look, again, that was the 1 hour high. Went up there, retested it on this 1 minute, rejected it. Nice. My stop was above here by a few ticks and rejected it. And I should have added to my shorts. Adding more shorts would have been nice up there, but I didn't. just because, again, I'm concerned of the lack of binary events today and other things with the market. So I left that position open, didn't add to it, went down, impulse moved down, my position got closed. So originally I was hoping it was going to come to 107. Again, my profit target, I didn't move down all there. I was just going to keep adjusting it. Well, when that went down and closed it, it went down for another minute, a few more ticks, but thank goodness I closed there because you can see what happened there. Bottom, retest it, and went back up. Zoom up. Very nice. So again, I didn't get out for profit exactly on the bottom, but I have profits. And you can see went down one more test, rejected it, reversed. Very nice. So again, here was nice. So I got in, you can see between here, but again, when that panic sold off there, nothing wrong with sitting on hands and waiting for retests, scalping on the 1 minute day trading here. So again, that retest there, that would have worked out well if I went short there. As well, if I went long on a retest here, right there. So let me show you on the 5 minutes, candle how it looks. That one, because I see the confirmation on the 5 minute. So on the 5 minute, it reversed again. That was green up there. Tested it. 5 minute candle got done. Rejected it. So one would have looked to got me. I would have looked to gone short on the break of here. And this candle as soon as it broke below that. And then here again, you have this big wick, 5 minute candle, a retest here. One would have gone, I would have like gone long on the break of that. Again, on the 1 minute, looking for the trade, on the 1 minute, taking the trades, but I have the setups on the 5 minute. And then I have alerts or working orders as soon as they break it. Yep, so again, I would have got in here earlier, obviously. I still took that short. Worked out fine. Look at this. Again, broke above here, broke above here. And look what's happening here. So you have a retest. Retest there. So one could look and take a trade here if you have that confirmation you like. So let's put it to the 5 minute. Here's the 5 minute. Red candle up there. Well, this one's not done yet. But it's lower high, lower low. Regardless, the point is it's showing bearish. This will get done in 1 minute. But the risk here is because it's green. Yep. And here it's slower in the day session. It's almost 11. If you look here, let me take this down. Certain times of the day, I don't want to take the risk because again, these trends were nice here, but now it's doing more consolidation, less volatility. This on the 5 minute. So again, you see these big wick candles, more of a consolidation, not trending. Nothing wrong with not trading anymore, done for the day, because the opportunity was these trends here, here, here. Limited time of the day, you often see them. So define your time of day trading really helps a lot. And look at this. It's done, that green candle. Look, higher high, higher low. Let's take it to the 1 minute. See? Nice. And put this on the 15 minutes. See how the 15 minute looks there. Well, there you go. On the 15 minute, green candle, higher high, higher low. So trending higher on the 15 minute. Whereas it took that short right there. Where would you take that short? Okay, we're looking here at the 1 minute. When this candle, red candle, got broken right here, if you took the short there, and the confirmation going short, so for a nice few ticks is what I'm looking at my strategy done. Yeah. So I'm gonna finish this here on the 5 minutes so you get a little bit see more. Regardless of what financial instrument I'm using, my strategy is the same on the setups and entries.